Hocus pocus, what's up, friends? I hope you are doing well. It is Monday, September 15th. Here we go. Let's get into this market. Today was a big day in the market. Obviously, I think everybody knew today was pretty much going to at least hold its ground, and it certainly did. Now, there were a few pop-up situations today that no one saw coming, but we're going to talk about those. Friends, let's talk about Open. Let's talk about SoFi. Holy friggin' smokes. There's so many things to talk about, but obviously try to keep it, on a narrow path here where we can all focus on kind of, what's going on at the moment. This is the start of what happened today. So before the market opened today, of all people, sweet Elon here came out and said, hey, I am actually going to buy back $1 billion shares of Tesla. So that took Tesla stock from bloop to over $400. It was like, holy friggin' smoke. So he's working that out. Once that deal gets settled through the courts, all that, because when you buy so many shares like that, it has to go through a lot of different laws. But he'll have essentially get back like $1 trillion. I mean, it's an insane deal. So he's obviously he's done this before. It's nothing, but this is kind of like the biggest one he's ever done. So this right here, this is kind of him just saying, again, I'm betting on my company. We're about to do amazing things, which I have spoken on this. But if you're not in Tesla, obviously it's expensive, but it is going places. S&P 500 once again broke all-time records again today. And we're at 66 hundo points. So let me turn on down my phone there. So this is freaking crazy. And this week, Wednesday, by the afternoon, we should know what these feds are going to do, or how big a rate cut are we getting? What are we talking about here? What are they going to do? And that is going to determine a lot of, honestly, the rest of the year in the market. I mean, that's really going to decide where we're going here. Now, let's go right into Open here, because this is a situation that I've gotten so many comments today, and, everyone's wondering the same thing here. Is Open going to go more? And I think this is where the big argument starts right here, where people go like, Open's a meme stock. Open's not a meme stock. I think the safest thing to say right now is that Open obviously is a meme stock, and that's okay, because there's more that could happen here. And now with Open having, these two amazing people coming back into the company, there are some deals that have been set in place here that are almost like, okay, well, this must have to work, because this is a situation of, this is something we really haven't seen before. So that's why there's so much anticipation of what could happen here with Open. Now, one of those big elements here is that if Open, within these next few months, hits certain price points and remains around those price points. I put it all up here so you can read. There's more information on this, obviously, but a lot of people know about this and some people don't. But this is why a lot of people are saying the Open is going to stay at $10, go to $15, move to $20, if not move more into a $30, $50 zone. Now, obviously, it's going to take a lot of pushing. It's going to take a lot of buying. It's going to take a lot of faith in investors and greed and all that kind of stuff that we love in the market. But this went from an interesting situation to a very aggressive, really interesting situation now, with the CEOs being wrapped up, the CEO and chairman wrapped up in this, kind of their deals with the company, the share, the stock essentially, and what can happen here. Now, too, obviously, like the third big situation that's around this right now is the rate cuts. What are the Feds going to do here? What is Jerome Powell going to come out and say here? Are we going to have 50 basis cuts, half that, or are we going to have 3 significant base cuts over the next 3 months? Kind of ending out the year here. What are we going to do? Either way, rate cuts. If we don't get a lot this week, presumably for the rest of the year, they're going to be here next year regardless, because Trump's going to put someone in that's going to do it. Jerome is pretty much, he's going out here, and this is pretty much his last hurrah this moment. Now, the good thing about rate cuts situation, if you're like, oh, what are they going to happen? What if they don't happen? The job reports have been so terrible, and inflation not that bad as of right now. They kind of have a clear-cut pathway that they can at least do, just even what a lot of us are thinking, just at least 2 little base cut by the end of the year here, rate cuts. Now, that's good. Obviously, and this is a whole argument itself where people are like, they want big rate cuts, small rate cuts. Some people are like, I don't want rate cuts because it's gonna cause more effect over here. I get everyone's argument, but one thing too that you have to realize is that this market has priced in rate cuts, and this is, and I believe there's going to be rate cuts. Listen, I am drinking the Tom Lee juice. I don't know if anybody knows this, but like, this guy has been calling the market for a long time. But this year, this guy, I don't know if he has a time machine, but my God in heaven, he has called this market. Tom Lee is very much in the camp of believing that the S&P is going to 7,000 points by the end of the year, that he believes the S&P 500 is trying to keep up, get on path, the track here with a lot of these companies that are in the S&P 500 because they're coming out with such aggressive quarterlies, not to mention the Dow, the NASDAQ. All this stuff is growing at an unbelievable pace right now. So what this means too with Open is that if Open ever had a chance to really get on track to paying down debt, getting money in the bank, all this stuff, this is the moment. This is the moment 100%. So it's a situation of where it's a meme stock, where it's manipulated. It's highly pushed around by investors. Okay, that's essentially what a meme stock is. Okay, that's fine. There's a lot of money to be made in meme stocks. There's nothing wrong with saying that. I think people have put such a bad rep on meme stocks, because of the whole GameStop, AMC, play out that went down there years ago. But I mean, those are plays that change people's lives, and I still believe, and it's already happened here where Open has made people tons of money, and I would not be surprised to see that this stock could go to $15 by the end of the week. I mean, I really wouldn't. Now, talking about, I told you last time I talked about this, like, I sold out, I took profit, in this. I'm be completely transparent with you. I am greedy, so like most of you, I'm sure that's why we're all investors. That's why we're all here. I know my fellow investors. I know my buddies out there. A lot of us are looking to buy back in at 7-8 now. I think there's a chance maybe today was not that day. People were anchored into the stock today, and the market was running hot. The market was just it was crazy running today. I'm hoping before the talk of what the Feds are going to do here that maybe, and this could play out many different ways. Obviously, this just because I'm yapping my gums here doesn't mean this is going to play out the way I'm saying it's going to play out. But I'm hoping maybe tomorrow, Wednesday, somewhere before the Feds start talking, people get impatient. And people are letting their shares go. They're taking profit, and I would not mind to scoop up a lot more, get right back into this hot and heavy, around $7-8 range. Now, obviously, you do what you want to do. If you bought in at 9 or 10 today, I'm not saying you made a mistake. I'm just saying this is where I'm at personally, because I do think we don't know what the Feds are going to say. The Feds may say, "Hey, we're going to do a 2.2 cut," and that would be good, but the market might go, we were wanting more of that. We were wanting more, and it might sell off a little bit. So obviously, the more aggressive they go on these rate cuts, it's going to be better for Open, obviously, because essentially it's a real estate company. But it's, as we all know, it's the Carvana of real estate companies. But two, when we talk about long term here, so for the people that are in here talking, about OpenAI Open Door here. I haven't been calling it OpenAI, have I? I get these two things mixed up because I look up that company a lot too. I'm always reading about OpenAI. Anyway, Open Door here. This is definitely a conversation where I think regardless, this is where the housing market is going. Just automated system where people don't want to deal with real estate agents. They don't want to deal with meeting people. It's just like buying a car. People don't want to deal with car salesmen. They don't want to go to car lots. They just want to buy the car in their bedroom, on their phone, on their laptop. And the same is going for house marketing now. So this is essentially what Open Door is. Where they'll fix up your house, they'll sell your house, they'll give you the best they can for the price wise. It's a real situation that's taking place, and with rates being cut here, the hope is that the housing market moves forward. And today, I think it was today or yesterday, where Trump is just talking about this. Now, obviously, this is just a random Trump comment at this point, but Trump is mentioning now that he's wanting to see if they can do away with capital gains. Now, obviously, capital gains will go into many different sectors, but, obviously that would affect, stocks, real estate, things like that, people taking lump sum amounts of money. I'm gonna tell you right now, if they take away capital gains on stocks and this kind of stuff, people are I'll be trading Dogecoin every day and make a living off of it. But right now, Open-Door, I'm assuming that if we get a hefty rate cut here Wednesday, if Jerome Powell comes out and says, hey, we're doing a pretty significant rate cut, that we could see Open here easily push past $10. Now, if they do not do that aggressive of a rate cut, I could definitely see this just kind of holding around this $7 to $9 range at the moment. Now, the good thing about this whole situation that's taken place before us is that Open has these two new people, chairman and CEO, attached to it that come from very big companies. They're focused. For the first time in a long time, Open, there's more going on with this company in the last weekend than there has been last year. This company was headed for the grave. That's why the stock was 50 cents just weeks ago. It was headed for a disaster situation. Now, in what got this ball rolling here is when the CEO just left town. Took the money and ran. And now you're seeing two people come into the company that have very successful backgrounds, have made quite an aggressive deal to where it almost looks like if they're going to make these big paychecks, the stock itself has to do well, which makes investors go, okay, well, I'll take that bet. I'll buy in at $8 and hold it maybe until at least it's $15 to $20. I can do that. I can hold about 500 shares to 100 shares for a few months to see what happens. That's kind of where investors are mentally, I think, with this right now, that it's a very unique situation. But the long-term lifespan of Open-Door here, there's obviously a huge mess that these people, these two guys that just came back into the company are having to clean up. They're talking about firing people. They're talking about, really cleaning up this company. It sounds like it's a huge mess. But nonetheless, I think just in general, and this is a very broad statement, that I just think this is where things are going with the housing market. I really do. I think this is where the industry is going for a lot of things. People, 10 more years, people may not really be going to grocery stores. Most people, I think a lot of people get their groceries delivered. Everything is becoming automated where you can do it on your phone, on your computer. People just don't want to deal with people. And this is, Open-Door, they are the only company that is really this far ahead and aggressively pushing this motto, this business model. So, long term, yeah, I think it's there. I think it's going to be a hard relationship. I think it's going to be a nail biter. But short term here, I think there's a lot of money to be made if you're buying and selling this at the right times, taking profit here, there. Like you've been for the past 2 weeks. This is going to be a very lucrative swing trade for you. So it's gonna be an aggressive week, 100% with the stock. In SoFi, sweet SoFi. So friends, I have been on a mountaintop screaming here that SoFi is going to $30. We are so close for SoFi getting to where I think it's going to go here. I don't think $30 is that big of a deal at this point. I can already kind of vision it and see that, that $30 sign is right there in front of SoFi. I think it's already there. What I'm really interested in is obviously the rate cuts. And then on top of that, by the end of this week, can SoFi be around $28, $29? Maybe the 30 comes this week. It's not going to take much more volume. It's not going to take much more buy-in. It's getting close. Then with that, with whatever rate cuts we're getting here, we've got quarterlies, the third quarterly here, less than 50 days, for goodness sakes. They could be insane quarterlies with SoFi. They're obviously going to be bigger than what the last ones were. So I still think this is for if you're buying into SoFi right now for a life-changing investment for the next 5, 10, 20 years. And that may sound like somebody may hear that and go like, are you crazy? That's way too long. For a lot of people, it's not. For people that are looking for long-term investments to really grow with a company, this is it. Like there's a lot of great opportunities, but this one right here is aggressive and it is good. This right here has so many apples that have not been plucked from the tree. That's what you have to understand. It's still a very cheap stock for what it is going, not if, what it's going to be in the next 5, 10 years. Okay. We're still talking about next year, probably adoption into the S&P 500. We're still talking about dividends being attached to the freaking stock. We're still talking about, somewhere in the future, depending on how crazy the stock can get and when it really starts to take off even more here, maybe a stock split somewhere down the road. This is a real conversation. So, and once they start doing dividends, I imagine dividends will pick up every few years. That's a real thing. Once SoFi says like, hey, we're going to start doing dividends, there's going to be a lot of more, people that buy SoFi just because it's such an aggressive growing company right now. Not only that, the stock too, but just that, there's people that just invest in dividends. I have people that I know, like friends that like they just really invest in dividend stocks. They see growth stocks, but really they just like to save money and buy, dividend stocks, ETFs, stuff like that. Bank stocks, car stocks. I don't get a lot of it. It's not really my thing, but these are the kind of things that people like. So everyone's different in the market. That's what you have to realize. I mean, that's why it's good to talk to other investors because, I don't think anyone should invest alone. Even if you're just on chat rooms and you're reading what other people are doing, what they're seeing, everyone eats different foods. Everyone sees different things. I mean, it's good to see what other investors are doing, what people are betting on, betting against. But I am very bullish on SoFi. I think this is just, I think this is just a missile that is taking off 100%. If I could visualize what was coming down the pipe here, friends, I mean, I think this is a $50 to $60 stock here at least by this time next year. 100%. And I think that could come even sooner here when SoFi undoubtedly starts producing billion-dollar quarterlies. 100%. So friends, I am excited. You should be excited. This is the week. This is the Super Bowl week when we really find out what is coming here. So I imagine more than likely by Friday the market will be red. It will be dead because people will probably have taken massive profits. More than likely, I imagine Wednesday, Thursday, depending on what kind of rate cut news we get here, the market is going to go freaking nuts, and then people will start. They're going to go, well, I'm going to take some profit. I want to have a nice weekend. So, right now it's fun, but there's going to come a moment in this week too. Don't be naive to that, where people are going to take profit. Yeah, take profit. Who cares? So friends, I wish you all luck, and I will talk to you soon. Bye, everyone.